Morning, everybody. It's the 3rd of December. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, gentlemen.
Morning,
Good
lads.
morning.
Everybody okay?
Yeah, all good.
Yeah, all right. Yes. Bit cold, bit chilly, but good.
It is a little bit, isn't it? Yes. Good. Good day off yesterday, Ian?
Yeah, very nice.
Lovely
It was
stuff.
a chore day, shall we call it?
Yeah.
That's
Good to get it out of the way.
Nice not to be sat in front of screens, to be honest.
Absolutely. So with that, yesterday was, well, there was quite a lot of price action. We certainly had a lot of trades triggered on our intraday ideas. It was over 30 yesterday, wasn't there?
36, I think you had.
So we covered 54 markets and we had 36 of them go live. Yeah. So what's going on with the news today? It doesn't appear to be an awful lot on the headlines. I'm not across that. Ian, what's going on with OPEC?
The meeting, they come together again today, because obviously it was delayed at the start of the week, wasn't it? Because they're having in-house to-dos about the output cuts. So basically the big boys, which is Russia, Saudi Arabia and United Arab Emirates, have basically been at loggerheads with regards to output cuts. So basically Russia wanted to stop the cuts and the other guys didn't, and now they're talking about and hopefully getting an agreement through today, which will basically say that the cuts will be gradually eased over the next few months.
Yeah, that's just come out on Reuters as well.
Yeah, but whether or not, I've got an interesting chart in oil, so I can see some downside.
Let's see it.
So I don't know whether or not they're going to.
You've got to share your screen, Eve, and then we
Yeah.
can have a look.
Let's have a look. Share. All right, comms. This is the. I think it's the January contract, isn't it? So we've seen a little bit. Basically, that's 5. This is the 8-hour chart, which is a bit of a weird time frame, but I quite like it. That's 5 days of consolidation with sort of just mild downward price action. But I've got this confluence area here in 46.72, 47.08, which would make a bearish butterfly formation. So I'm wondering whether or not this is sort of seeing a bit of price pressure to the upside on the back of a potential agreement on cuts, and then maybe gets right to the end of today and Russia go piss off, I'm not doing it, and it comes to the downside. I think oil is going to come off.
Yeah, interesting one.
And I think the dollar's at quite a critical level as well. But I'll
show us what you got.
Right, okay. Well, it's not. I think we might trade sideways today. You know, we always say that you need a bit of a catalyst to. And I have had a day away from the screens, honestly.
Yeah, right. Don't believe that for a second.
And you need a bit of a catalyst to get a change of sentiment. And obviously we've got non-farm payroll tomorrow. And I've looked at yen crosses and they look quite bearish, and I've looked at dollar pairs and they look like they might see the dollar strengthen. But like I said, you do need a bit of a catalyst normally to get the ball rolling. So if you look at this chart, this is a weekly chart. We're just on that. If we get rid of that fib, we're on a 161.8%. So that should say that we take a little bit of a tick to the upside, at least. If we look to the daily chart, we've got a 261.8% fib here at 90.63. If we look to the 8-hour chart, we've got a butterfly formation at current price action. And if we look to a 1-hour chart, God, do you need any more reasons to buy it? And if you've got a 1-hour chart, you've got a 261.8% extension at 90.82. With price being
getting a reaction there.
Price been reacting this morning. So I don't know whether or not this is just maybe a little bit of a false spoof, and then we'll get like a knee jerk just to take those levels out and then move up. Yes, tomorrow. I mean, if you're looking at so basically what I like to do is try and get a bit of correlation. So obviously, if the dollar is going to go up, then euro dollar etc. should go down. So we've got a 161.8% fib here again on the 8-hour chart, but this is the most interesting one for me, which is the weekly chart. So we basically consolidated or moved lower from close to 61.8%, but I've put here perfect confluence, because if you take that away for a second, you've got a 78.6% pullback level there at 121.45. If you push that onto 121.45, so that's your 100% projection. If you look up here, you've got 161.8% and 127.2%, and that from a 78.6 makes a perfect, God, I forget all the bloody names, butterfly. So basically what would happen here, if that plays out correctly, is you see this deep correction lower from this confluence area. So it's looking, so that's looking quite sexy, if you like. The cable, not so sexy. Obviously we've still got that wedge, and I think we might just consolidate. I think we might retest again. So I think we've retested 3 times now. But if you look to this time frame, and this is a monthly chart, it's not a million miles off, but we've got a confluence area doing the same thing but making a slightly different pattern. That's a butterfly at 135.50. So again, I'm wondering if just maybe a last tick up. Dollar Swiss doesn't look as good, because you've got to remember, if you're buying dollars on safe haven, then you'll also be buying Swiss on safe haven. So dollar Swiss is quite a hard one to work out on risk trades anyway, and I don't think there's really anything in the way until sort of down here. But the rest of the dollar majors, I think they're all pretty prime for a turn, especially New Zealand dollar, and I keep on going back to New Zealand dollar. I like that. So we've got a 261.8% fib here. We've got a bearish outside candle, decent bearish outside candle on the 8-hour chart, and it's sort of rejecting that level again this morning. And New Zealand dollar is correlated to oil, so if we do get that drive lower in oil, we should get a drive lower in New Zealand dollar as well. So
some good risk reward on that.
Yes, some mighty risk reward, because if you look at these longer time frames, you know, you could be seeing a move all the way down to these sort of previous swing lows, 61.90.
Very interesting.
That's what I've got.
Anything else on the FX, Ian, or is that it?
Yeah, so just quickly, the yen crosses. So let's just get out of that. So dollar yen, I think you've got, if you get a move to the upside anywhere around 105.05, that's worth considering a sell. But you've got to remember, it's the same as dollar Swiss. So both single currencies are fighting to drive up, if you see what I mean. So it depends which one wins the game. But these are quite interesting. This is euro yen. That I didn't see that before, but you've got an evening doji star there on the 4-hour chart, and then you've got this sort of near perfected pattern, a bit wide. And if you're going to trade this one, your stop's got to be above this one. Sterling yen, again, not quite as aggressive. And thinking about sterling dollar, sterling's still got a chance to move to the upside, if you remember about the confluence zone that we put there. So they've got a confluence zone just a little bit higher up, which is at 140.55. And Aussie yen, the Aussie pairs I can't get a handle on at all. I wouldn't be buying them because of obviously what I've just said, but I haven't really got anything till up here. So that's me done.
Okay, thank you, mate. So, I mean, sterling yesterday was pretty volatile, all in all, given that we've got things going on with Brexit still. In terms of the news with regards to that, France have warned they could veto a trade deal between the UK and the European Union if it doesn't like the terms. So they're really piling on the pressure to the EU negotiating team not to make any further concessions. Particularly, I think they're interested in fishing stuff because they plunder our waters, don't they, for their fish. So yeah, I mean, sterling pretty difficult as a result to get any sort of handle on, and that impacted the FTSE yesterday as well. Obviously, the export, mainly exports from the FTSE 100, so there was a big impact on that. With sterling dropping, the FTSE was pretty strong. Steve, what you got on the indices?
Well, indices have obviously continued this sort of bullish run. They had a bit of a sell-off at an early part of yesterday, and then pushed higher again. FTSE's really looks like testing this 65.15 possibly this morning, if not tomorrow. DAX has got the level at 13,460. Again, we're trading a little bit lower than that, but everything looking positive really on the European indices. CAC, SA40 actually almost hitting the highs from back in August 2018. So that's new highs for the year in SA40.
Wow.
And it's cleared the 2019 highs as well. So yeah, looking very positive. That's a weekly chart. So if it closes up there, that'll be the highest weekly close since January 2018.
Wowza.
Dow Jones again had a decent day yesterday. I think we bought the dip in that. So that did okay. Nasdaq, we didn't do so well. We were selling a break, looking for this break lower. Obviously, we're hitting the all-time highs again, and we've got this is the third test of this resistant line now. So potential for a real sort of humdinger of a battle to go on in Nasdaq. And we shall see. Obviously, that'll be we hit the highest weekly close ever last week. Are we going to add to that this week? Potentially, yes. Risk reward is pretty difficult with trying to be long of these, because obviously your stop has to be way down here. This is the S&P's all-time highs on this morning, so all looking pretty decent. Again, we talked about China as well. Hang Seng not doing quite so well, and the Nikkei smashing it, loving it, and with the Oz is a bit of a laggard. So overall, they're looking quite positive, but it's very difficult to get a decent trade out of them. They're you know, I'd buy dips lower, but a lot lower.
Yeah.
The only real value is to maybe there's a few sort of selling opportunities when you get reactions. You know, all the news that's coming out at the moment, all the good news is coming out, and we're having a steady sort of grind higher, and they're very difficult markets to trade. So you know, it's can't really say much. No point in saying any more about that really. The commodities, I was going to look at the gold. That's had a lovely reaction. We've talked about this. This is the daily chart, the Morningstar formation pushing higher, and it's approaching the first real test of resistance for me, 1848 to 50, and above that we got 1864. So really sort of like looking stronger this morning, and obviously the dollar is under pressure, so that naturally leads to a move higher in gold. But you know, if we do get that dollar bounce back, I think, and we haven't, or we sort of like get a chance to retest this 1850 level, that could be a decent area to fade gold, because you know, like Ian was saying, the dollar has that feeling that it's been under a lot of pressure recently, but can it be sustained for much longer? I think there has to be some sort of correction of some sort. Yeah, I mean, it's like everything. You sort of like, you've been waiting ages for this pullback in gold to get long. It's hit the level, hit quite close to a great pullback level, 50%, and now I'm sort of second guessing myself and questioning whether it's going to stall and then go lower. But I suppose we'll see over the coming days and weeks.
Yeah. Okay, great. Well, as you mentioned, Steve, trading obviously has been difficult, and very much so that is the case with our gun to the head ideas. We are picking ideas early on in the trading session, letting them run until 9 o'clock unless they're stopped out before that. And we are struggling to string any sort of winning run together at the moment, given all this sort of false signals and difficult chart setups that we're facing. Yesterday was the same. It was only two of us yesterday, as Ian was not around. Probably a good thing, because it may have just ended the same way for us all. So
I think Ian would have saved the day. Actually, I've got a bit more confidence in Ian.
Well, I wasn't saying
it.
I didn't say it until I didn't have confidence in him. It's just that in general, the markets are pretty bad. So we had I went long of euro. Steve went short, but we still managed to both get stopped out, unfortunately. Pretty gutted with how my trade went. This is euro New Zealand dollar, so I was buying here, and yes, got stopped out there.
Oh, you should have had your
lovely.
stop a little bit lower than that.
Should have done, shouldn't I?
Yeah.
That's the game, though.
And your target should have been a bit higher. If you'd put your target a bit higher on that green line,
yeah, should have gone to
put your stop just below where it made the low, you'd have been all right.
Yeah, hindsight's wonderful, eh? Right, so who's got a trade for us today? We need a winner. Go on in, Ian.
Euro dollar.
yen.
From what I've now, I like that. Love that little doji at that 78.6% fib off the weekly chart. So I'm going to take this 121.15 selling. I've got to put my stop above 55, so that's at 121.59, and I'm going to target this swing low, which is at 119.22, which gives me 4.4 R.
Perfect. Steve, shall I go, or you got one ready?
No, you go.
Okay.
Nowhere near ready.
I'm looking at euro as well. Just scanning through the 60-minute charts as I do for these ideas, and I've got a little head and shoulders top in euro Oz. So this is the hourly chart. So we've got left shoulder, head, right shoulder, breakdown here with a nice bullish candle, retest there over the last hour, and now looking to head lower, I think. So the measured move of this small head and shoulders top pattern comes in at 162.27. That's my target. I'm selling now at 63.07, stop loss at 63.43, which is just above that neckline, which gives me 2.4 R from here. So that is my trade for the day. Steve, did that give you enough time?
Not really, no. I'm sort of like, but I'll try and do something. Yeah. So I'm just thinking I'm not going to go against the longer term trend. So whatever I look at, I'll stop at one. Longer term trend, sterling Swiss. There you go. That's like a little bit bearish. Does it look? Yeah, I'm going to sell sterling Swiss because the weekly is bearish. So I'm just going to have a little go on this. Sorry, there's no real short-term technical behind it. It's getting short at 119.82. Is it? Is that the green number?
It's the live number at the top of the screen.
This one here?
119.83 trading at the moment, Steve.
Okay, lovely. I'll take that. 119.83 trading. I'll put a really tight stop in. 120.03. And I'll go for a little 4-to-1 risk reward. How about that? 119.03. So I'm going to do that myself. That's it. Selling at 119.83, stop at 120.03, and targeting 119.03.
Perfect. Best of luck with that, Steve.
Yeah, I need it for that one.
Okay, so we've got three trades. We're going short of euro Oz, short of sterling Swiss, short of euro dollar. So good luck if you're looking at any of those as well. In terms of what we can expect for the rest of the day, we've got initial jobless claims due out at 1:30. Claims expected to rise by 786,000. Then at 3 o'clock, we've got US ISM non-manufacturing PMI, which is expected to fall to 56.2 from 56.6 a month earlier. And we've got OPEC meetings again today, as you mentioned. Any speakers to keep an eye out for?
None, actually.
Okay, they're having a day off, are they?
I think so.
And then obviously
tomorrow.
We've got non-farm payrolls tomorrow.
Yes.
So plenty to keep us occupied. And let's see how those trades go today.
Lovely.
Anything else, gents?
No, that's all good.
Lovely. Have a great day, everybody, and we will be back tomorrow morning.
Enjoy.
Cheers.
Bye.